Welcome back to AlgoBot, your home for clear, practical breakdowns of MetaTrader 5 trading robots. I'm your host here at AlgoBot, and in today's lesson, we're taking apart an expert advisor called Momentum Pocket Pullback. What makes this one interesting is that it uses no traditional indicators at all. There are no moving averages, no oscillators, nothing painted on the chart. Instead, it reads raw candles to find strong momentum, waits for a brief and shallow rest it calls a pocket, and then trades the continuation. By the end of this video, you'll understand how it spots a setup, where it enters, and how it manages risk. Let's get started. Let's start with the big picture. Momentum Pocket Pullback is a continuation strategy. The core idea is simple and very old in trading. When price moves hard in one direction, it rarely travels in a perfectly straight line. It pushes, it pauses to catch its breath, and then it often pushes again. This strategy tries to capture that second push. What makes this expert advisor unusual is that it is entirely built from raw candle data. Every number it uses is derived directly from the open, high, low, and close of recent bars. It calculates an average candle range as a yardstick for what normal movement looks like. It measures how far price has traveled in a burst. It measures how deep a pullback goes. And it places its stop based on the actual swing low or swing high of the pause. There are no lagging indicator lines feeding its signals. It reads the market structure itself. In terms of what it trades, this expert advisor is symbol and time frame agnostic. You can attach it to a currency pair, a metal like gold, or an index, on whatever time frame you prefer. It simply waits for its specific momentum pattern to appear on the chart it is running on. So who is this style suited for, in an educational sense? It is built for traders who like the logic of trend continuation and momentum trading rather than picking tops and bottoms. It only acts when there has been a clear, forceful move, so it tends to stay flat during quiet, directionless conditions. It also trades just one position at a time and lets a predefined stop loss and take profit manage the outcome, which keeps the logic clean and easy to study. Remember, throughout this video, we are studying how the code is built and how the rules fit together. This is for educational purposes only, and nothing here is a prediction or a promise about results. Now let's walk through exactly how the strategy makes a decision. Everything happens once per newly closed bar. The expert advisor watches the still forming candle, and the moment its open time advances, it knows the previous candle has just closed and it runs its checks. It also only works when there is no open trade for its magic number, so it never stacks positions. First, the strategy builds its yardstick. It looks back over a window of recent bars, by default 14, and averages their high-to-low range. This average range tells it what a typical candle looks like right now, which lets the same logic adapt to both calm and volatile markets. Second, it hunts for an impulse leg. This is a run of candles, by default 4 of them, that have traveled a long way. The net distance from the start of the leg to the end must be at least 2.5 times that average range. On top of that, the candles must mostly agree in direction. At least 60% of them have to close in the direction of the move. This filters out choppy, indecisive runs and keeps only clean, forceful pushes. Third, it looks for the pocket. The pocket is a shallow pullback of 1 to 3 candles that comes right after the impulse. For a long setup, the pocket must not push above the impulse high, and its dip must not retrace more than 60% of the impulse range. In other words, price rested, but it did not erase the move. The strategy tries the shortest, freshest pocket first. Fourth comes the trigger. For a long, the most recently closed candle must close back above the pocket high, and it must be an up candle with a bullish body. That is the resumption signal. For a short, the mirror applies. A strong down impulse, a shallow bounce, and a candle that closes below the pocket low with a bearish body. When that fires, the trade goes on. The stop loss is anchored just beyond the pocket extreme, padded by a buffer equal to a fraction of the impulse range. The distance from entry to that stop is the risk. The take profit is then placed at a fixed multiple of that risk, by default 1.8 times. From there, the stop and target manage the trade to completion. Let's read this the way you would inside MetaTrader. At the top are the input parameters, the settings you can tune from the Inputs tab. ImpulseBars sets how many candles make up the momentum leg. Pullback Max bars caps how long the pocket can be. so raising it lets the strategy accept slightly longer rests. Range window controls how many bars feed the average range yardstick. Min-impulse multiple is the strength filter. Increase it, and you demand a more violent move before anything qualifies, which means fewer but cleaner signals. RetraceMax governs how deep the pullback may go, so a smaller value insists on a shallower, tighter pocket. Stop buffer frac is the cushion added beyond the swing for the stop. RewardRisk sets how far the target sits relative to that risk, and lots is simply the trade size. Now the signal block. By the time we reach it, the code has already computed net, the directional travel of the leg, average range, the yardstick, and the pocket extremes. The first line checks that net is at least min-impulse multiple times the average range, confirming real momentum. The bull check confirms enough candles agreed with the move. The two pocket lines confirm the pullback stayed inside the leg and did not retrace too deeply. Then breakout close greater than pocket high, together with a bullish body, is the resumption trigger. When all of that is true, entry is read from the ask price. The stop loss is placed below the pocket low minus the buffer. Risk is the gap between them, and the take profit is entry plus reward risk times that risk. Finally, place sends the buy order. The short side is an exact mirror of this logic. Let's walk this illustration left to right. Notice there is no oscillator panel below the price, because this strategy reads structure directly from the candles. On the left, you can see a strong run of green candles climbing quickly. That is the impulse leg, and its net travel is large compared with the average candle size, so it qualifies as real momentum. Right after it, a small red candle dips and rests. That is the pocket, a shallow pullback that holds well inside the leg without erasing it. The green dashed line marks the pocket high, the long trigger level. Watch the next candle close back above that line with a bullish body. That is the resumption breakout, and the buy entry fires. The stop loss is placed just below the pocket swing, marked here as the swing stop, and the target is set at a fixed multiple of that risk. Price then continues higher into the following candles and reaches the take profit marker. The long idea has played out. Now the chart rolls over. Watch a fresh run of red candles drive price down. That is a new impulse leg, this time to the downside. Again, price pauses, forming a shallow green bounce that does not climb back into the leg. That is the short pocket. The red dashed line marks the pocket low, the short trigger level. The next candle closes below it with a bearish body, and the sell entry fires. The stop sits just above the pocket swing, and the target sits below at the reward to risk distance. Price slides into that final candle and tags the take profit. So in one picture you have seen both halves of the strategy, a long continuation and a short continuation, each built from the same momentum, pocket, and breakout sequence. This is purely an educational illustration of the mechanics, not a forecast of how any real market will behave. And that wraps up our breakdown of Momentum Pocket Pullback. We covered how it builds an average range yardstick from raw candles, how it identifies a strong impulse leg, how it waits for a shallow pocket that holds, and how it enters on the breakout with a swing-anchored stop and a reward-to-risk target. We also read through the key MQL5 inputs and the signal logic, and we watched both a long and a short example play out on the chart. Remember, everything in this video is for educational purposes only and is not financial advice. If you found this useful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment telling us which expert advisor we should study next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.